All right, Intel. This is a stock that's actually been resilient in this recent market. What does that tell me? I mean, maybe a lot of the sellers are already out of Intel, because if you look at Intel stock price, it is down a ton in the last couple of years. So Intel is a company that has a long turnaround plan. It has lost a lot of market share to AMD and other chip manufacturers, and they're in the process of building a couple plants, one of which is right down the road from us in Columbus, Ohio, a $20 billion plant. Why do you laugh at that, Mo?
Just can't believe it's in little old Ohio.
Well, yeah, I mean, Columbus is a very growing, it's funny, I was on Instagram watching this great comedian. He was like a foreign guy, and he lives in Columbus. And I was like, oh, we got to get this guy. He's from England or something like that.
That's cool.
Yeah, so anyhow, so Intel has been hurt a lot. And look at this, guys. And this is one of the things I want to talk about with Intel. This is back in 2000. The stock hit a high of $75. It has not hit that high since.
That's amazing.
If you're new to the channel, we do individual stocks because we like to understand businesses, and we realize when you buy a stock, you're buying a piece of a business. So if this kind of thing is interesting for you, stick around, because the vast majority of our 2,100 videos on YouTube are individual stocks. We love doing it. But it also shows us about his history. Go back and Google the late 90s and Intel. Mo, you were, what, 10 years old in the late 90s?
Yes.
Intel was the company back then. If I told you back then, at this point, that Intel would be 23 years later, still wouldn't hit its all-time high, you'd have said you're crazy. Now, here's the even crazier part. In the last year, Intel has done $63 billion in revenue and $8 billion in profit. Back in 2000, it did $33 billion in revenue and $10 billion in profit. Now, the last year, they were making $20 billion before then, so there was a little bit of issues, but the bottom line is they were making $20 billion a year recently in the last few years. So profit doubled, revenue over doubled, and the stock is lower. So it means one of two things, or a combination. Either this was insanely overvalued, or this is insanely undervalued. Or it could be both.
Yeah, maybe a combination.
But it just shows you, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. What really matters in the long run are the fundamentals of the business. If I told you to go buy a company at a reasonable price and then not think about it for 20 years, and in that time period, the profit went up 4 times, what's the value of your business probably going to go up?
I would say 4 times or more.
Probably. And that's the key to investing. The difference is that we in the stock market see a ticker every single day.
Yep.
I was at lunch yesterday with our friend Michael.
Yeah.
I said to him, because remember we were in the chat with one of the guys from our community has become a researcher for us. He's a great kid. I said, God, I'm really glad I don't manage money for people.
Yes.
He said, why is that? I said, because I don't want to deal with the emotional tirades of investors.
I mean, imagine the calls that they've been getting the last couple of days.
Oh, yeah.
They're probably absurd.
And then imagine me saying, how does that affect us?
Yeah.
They'd be like, well, no. Every story is bad when stocks are down, and every story is good when stocks are up. Yep. But with real estate, I have partners in real estate, but the difference is there's no sign on top of my apartment building telling everybody every single day what that apartment building is worth.
Yeah, today it's worth 10. Tomorrow it's worth 9.75.
Correct.
Yeah.
At the end of the day, what matters is, did I drive revenue and profit over the period of time? That's probably what the value of my building is going to go up. Mm-hmm. That's it. And the same thing with stocks. The hard part about stocks is sticking with a stock or buying it here, buying it here, buying it here. Those are the hard things to do with stocks.
Yeah.
Right?
It's very difficult.
And that's the key, guys. Stocks, when they fall, the stories follow that justify the fall. Not the other way around.
Right.
Not the way of like, oh no, the media is going to put exactly why it sucks out there. Which is actually why I'm surprised about the market these days with these banks failing and all this stuff, and the market's up a ton.
Me too. Well, they can spin a story very quickly across all of them that says bailout or Fed's going to do whatever it is, and it can turn it to rosy news.
Yep. So let's look at the 8 pillars for Intel right now. Used to be a lot better, but revenue is down, net income is down, and free cash flow is down. This looks awful, right? It looks absolutely terrible. It's a $113 billion market cap. Oh my God, this is terrible. This is terrible. But
they have a plan going forward.
10 times free cash flow, 6 times PE. And this is a turnaround play.
Yes.
If you're not interested in waiting for a company for years and years and years to just turn around, this is not the deal for you.
Yeah, I think CEO said something about 2025, things will start shaping up.
Yeah.
That is a long...
And they tend to be early on that stuff.
Yeah, and it's a long process that will churn your stomach a little bit if you don't have the emotional control.
Of course.
And that's not a bad thing. Just don't do it.
Yeah, a reasonable return on invested capital, but this has been affected by their drop in net income. But look at their net income drop, $13 billion. Literally, they made $8 billion last year. That's $21 billion they were making before then. Look at their free cash flow is negative. 5-year free cash flow after the negative is $10.5 billion. Before it was 18 to 20. Yep. So they've really dropped their free cash flow because they're investing a lot more, and their free cash flow is down. Their operating income is down. So the question becomes, is this turnaround play going to work? And if you want to bet on a turnaround play, I don't believe in putting a big chunk of money into it. Yeah. A big percentage of your money. I have money invested in Intel. Don't do it just because of me. That's a terrible idea. Do your own independent research. And if it works, great. If it doesn't work, okay. But I look at these prices going, okay.
Yeah, the prices are interesting. The one thing, Charlie Munger, when he was answering questions at the Daily Journal, they asked him about Intel, and he was like, yeah, it's an interesting play. The thing is they have so much government involvement with the CHIP Act. He's like, I'm not totally convinced that they're going to get all the money that they are supposed to get.
Oh, I didn't know that.
Yeah, he said that, and I was like, oh, I didn't really think
about that. I didn't know
that.
he even talked about Intel. That was my thing. It was
very brief, very brief. I'm a nerd, so I watched the entire thing.
So here are the analyst estimates on Intel. They're expected to make 50 cents a share this year, and up to $4.81 a share in 2026. Take it with a grain of salt, guys. We don't know what they're going to do. Yeah. And analysts are...
This is very hard to predict.
2 weeks ago, there wasn't a single analyst who said that you should sell Silicon Valley Bank. 2 weeks ago.
Matter of fact, there was a lot of them saying buy.
Yes, a lot of them was actually the majority. The highest number were buys.
Yep.
Okay, revenue. Revenue growth is supposed to drop even bigger this year. Okay, it's going to be a tough road ahead. It's absolutely going to be a tough road ahead. So, what do we do from here? Well, we can use our stock analyzer tool. If you think Intel will be around for a long period of time, which even though there are people nipping at their heels, I still believe they're going to be a company that's around for a long period of time. I mean, look at BlackBerry. BlackBerry is still around, and literally they have zero market share. Not zero, but they're very big on corporations and government.
Yes.
And BlackBerry's still around.
Yeah, I mean, these guys are the largest logic semiconductor makers in the world.
And they're building a foundry, which means they can build chips for other people.
Exactly.
And some people don't believe in that, and I get that.
I think they're also building a plant in Arizona.
I believe they are. So what we can do here with the stock analyzer tool is we can make assessments about the future. Now with Intel, guys, it's going to be a very wide range. Very wide. Mo's going to do a 10-year analysis. I'm going to do a 20-year analysis. Now, this stock analyzer tool was used 1.3 million times by our users in 2022. The reason it's so important, it's a starting point for what you should pay for the company. Doesn't include the balance sheet, but every investment is the present value of all future cash flow. And we don't know what that cash flow will be. But we can make guesses on revenue growth, profit margin, free cash flow margin going forward, assign our multiples of PE and price of free cash flow, and then put in desired return, and it'll spit out a price. If that seems overwhelming, I don't blame you. It was overwhelming for me when I first started.
And it was overwhelming for the people that used it 1.3 million times.
Yes, but once you get in the hang of it, it's a very important tool to decide if you're even in the ballpark for a company, should you do more research. I don't recommend just buying because of this, but it's a good place to say, hey, this is really within the ballpark. I should really understand this business. Mm-hmm. If it's not in the ballpark, you just move on, find something else. Yep. And if you like all of this, plus all the tools that come up, and the great news is you can add the stock to your watch list and it'll notify you on the app and all these things. But we spend a lot of money. We have 7 full-time developers on this software in order to make it better and better. And it's only $1 per day. And we're actually running a special, $7 for 7 days. Go to everythingmoney.com, try it out. Trust me when I say, this will literally change the way you look at money. The number of messages we get every day saying this thing changed how I do everything. It's awesome. Mm-hmm. So Mo, you do 10-year analysis, I'll do 20.
Okay, this is gonna be hard.
And what we're gonna do is we're gonna do a little pause. We're gonna put our numbers in and then we're gonna come back and go through them. Okay, so I did a 20-year, Mo did a 10-year. Revenue growth. I went really conservative.
Yeah,
I went 0, 2.5%, and 5%. Mo, what'd you do?
I did 1, 4, and 7.
Guys, listen to what I said here. They will have 0 revenue growth for the next 20 years.
Yeah.
0. Mm-hmm. The chip industry is supposed to grow at 12% per year. Just inflation alone would get them 3 or 4% revenue growth. I am being ultra conservative here.
Yes, you are.
Profit margin. Again, I went ultra conservative. Mo?
I did 13, 17, and 21.
So I did 12, 18, and 24.
Okay.
And I still think 12, again, very, very conservative.
Yeah.
Free cash flow margin.
I did the same thing, 13, 17,
You know what?
21.
I need to do that. I need to do the exact same thing because even though recently it's been different, over periods of time, they're pretty similar.
And that's what I was thinking. And I was like, yeah, they'll match out. They should match out.
PE, what'd you do?
I did 14, 15, 16.
I did 13, 15, 17.
I thought 17 was high because I actually did put in 13, 15, 17. I changed it.
So I think that if they hit these revenue growth numbers, they're probably back in the leader of things and that moat's there and their return on invested capital would be much higher.
Yeah. Okay.
All right. Desired annual return.
11, 13, and 15.
I did 10, 12 and a half, and 15. Guys, this is a really big number over 20 years. 15% return over 20 years is a huge number. Yeah. That literally means like you're going to double your money every 5 years. So in 20 years, if you're able to buy at this price, you're going to get, if it doubles that means you're getting 16 times your money, 2, 4, 8, 16 times your money. That's a 16 bagger if this is correct.
Yeah.
Hit the analyze button. Boom. Guys, I have a low price of 19, a high price of 42, middle price of 30, which keep in mind is way lower than past prices we've gotten.
Yeah.
Mo, what'd you get?
My low price is 23, middle ground 34, high ground 47.
So to me, this says, this is interesting. Take a look at it.
Yep.
So guys, again, if you like the software, $1 per day for 7 days, $7 for 7 days, everythingmoney.com. Thank you for your time.